Welcome to the BF Anderson Technical Report for June the 13th. I would say that the most important observation I've made this week is that we are seeing improvement. However, it's mixed. It's a mixed improvement. As we can start out here with the NASDAQ, you can see we have retaken the lower moving average, and we're basically starting to struggle a little bit here as we got to the upper moving average. Now what's important here is that this moving average now needs to turn up, which means just a matter of time that if the index continues to stay above, say, 78, 7900, it will turn up. Now we can see also that volume on the downside yesterday was a little light. We're not seeing really any exceptional volume patterns here. Now on the weekly basis, again, we are above the 35-week moving average, and the 35-week moving average is starting to turn up. So like I say, it's mixed. This is a positive. I was very concerned, as I said last week, that if we break down below the 35-week for 2 consecutive weeks, that's a very negative sign. However, you can see the rally last week did come on above average volume, so it is improving. Now the advanced decline line, little changed. We're still moving somewhat sideways. However, we are seeing some short-term improvement, a little bit of a downturn yesterday, but advanced decliners are looking about the same. On the high-low index is improvement. We're starting to see fewer new lows and more new highs. But on the daily New York Stock Exchange new lows list, we're seeing, again, it got somewhat elevated, started to settle down. Yesterday we had about 80. We want to see this get back down above 40, so some improvement, but not enough. Now here's where I think the biggest improvement is the long-term graph here of the 10-month versus the 20-month. We're back above the upper moving average. The upper moving average has not turned up because May was a difficult month. And remember, the moving averages are updated monthly, but the indexes are showing that if this month stays here, we'll see a potential upturn in that upper moving average. Now on fear greed, we're still in extreme greed. We just kind of popped back into extreme greed yesterday after pulling back into fear. But there's a book I'm reading right now that's really interesting. It's called The Disciples of William O'Neill. Would recommend it highly. They talk quite a bit in the book about a window of opportunity, and the window of opportunity comes quickly and it closes quickly. And so when you get into these periods where there's extreme fear, really a savvy investor would say this is really a pretty good time for me to be adding money to my portfolio. Now, again, this is to me one of the most fascinating charts. This is the 200-week moving average. We go back to 2011. Now, what's interesting about the graph, and we've talked about this before, every time we get down to the moving average, we've been rallying, hitting a new high, and then a correction. We come down close to the moving average, we rally to a new high, then we get a correction. So last year in December, we pulled back close to the moving average, we've rallied to a new high, and then we've gotten a correction. Now after these corrections, we tend to turn around and make another new high. So it wouldn't surprise me at all here if the market isn't in the process of making a new high. Now the only real negative in the whole group of indicators is the small caps. The small caps continue to underperform. This is your 200-day moving average. If we could get the small caps back above the 200-day moving average and the 200-day moving average were to turn up, that would be incredibly powerful and meaningful, but it's just not happening yet. It is something to keep an eye on. The only really other good news here is that the value line geometric, last year, we rallied to a new high, then last year's correction, 2018 correction, got us back down here. Now we are making higher lows. Then we rallied back out of the box again this year. Then we got the correction in May, which pulled us back into the box. But right now we're at 518.54. So we have held, the box. We're back out of the box, and we're making a higher low. So far, so good. Now, on the yield curve, I want to talk about the yield curve real quickly because this is real prominent in the press. The yield curve, as far as our definition, which is the 2-year government note compared to the 10-year government note, has not inverted. But every time it gets close to inverting, now, it did not invert here because this would be a reading of 0.11. You have to get to a reading of 0 or negative to invert. So every time it gets down here where it gets close to inversion, the next thing you know, the media's all squawking about it and everybody's talking about it, but then boom, we rally and we get to where, we're at 0.21, we're not close to inversion. Then we just mess around, pull back again. Again, the media's all over it. We're going into recession, yield curve's inverting, and I'll be darned if it doesn't make a new high. Then we pulled back again here recently in May, and again, everybody's talking about it, and then boom, it goes to another new high. So I really think that the yield curve is something that's talked about a little too much. And I don't think it's as, it does not necessarily mean a recession. Okay, top 5, advanced micro devices. This is semiconductors. The stock has broken out, looks positive. Here's an old favorite, Chipotle Mexican Grill. This company really is doing quite well. They've had their problems in the past. However, the stock did go into a corrective period, has now broken out, making new highs. This is Copart, which is industrial transportation services. Very strong uptrend, looks good. So that's more of an industrial play. Enphase Energy, which is renewable energy. They make inverters for solar. New high. Stock's been really in a very nice uptrend after a gap up buy signal and very high volume. Now here's a stock that we own. This is cybersecurity. This is a company called Okta. They're real big into a new technology called identification management. We got a very strong buy signal on the stock right here where it broke out above that 10-day moving average. Stock has been making new highs and looks very positive. So all in all, what I'm saying is we're seeing improvement. I wouldn't bet the ranch. I'm not making a prediction, but I am saying we're seeing improvement. However, it is somewhat mixed. If you have any questions, give me a call. Thank you.